Stocks plummeting today ahead of the holiday weekend, but the Commerce Department is reporting some signs of resilience in the U.S. economy amid rampant inflation and rising interest rates. The department's third and final reading of this year's third quarter data showing that the gross domestic product, GDP, growing more than 3% on an annualized basis. That was more than a previously estimated 2.9% increase. But the impact that it has on the markets is it makes them nervous that the Fed will continue to raise rates. Joining me now is Executive Vice President at the National Taxpayers Union, Brandon Arnold. Brandon, it's great to see you. And the stock market was down pretty severely during trade today. It didn't finish at session lows, recovering a little bit. But still, this is the time we're supposed to see Santa Claus rally. We're not seeing that because the market is worried about $1.7 trillion in spending. It's worried about the Fed having to raise rates because of GDP and so many other issues that we're facing. Your thoughts on how 2023 is going to be? Because I've set it up on this show and just, laid it out for people that I think it's going to be pretty tough.
Yeah, I would agree with you there. I think it's going to be a tough year, and it's great to see this GDP number revised in an upward direction. Honestly, that was quite a bit of a surprise for me because after 2 quarters of negative growth, there didn't seem to be a lot to be excited about in this economy. But surprisingly enough, consumer spending has really buoyed this economy. Consumer spending up much higher than expected, even though there are some signs for concerns when it comes to food and energy prices, which both declined in Q3, revealing that there may be some consumers out there really struggling right now.
Yeah, and what about the retail sales, though? Because we've been watching the consumer very closely. You're right. It seems like right now everything is intact, but the retail sales number was a little disappointing, especially as we go into the holiday season and you would think people are spending more. I'm wondering if it's starting to catch up with everybody, the kind of spending they have been doing as they're paying more for things.
Yeah, I think that's absolutely the case. People have hit the breaking point in many instances. Sustained inflation over the course of more than a year has started to catch up with consumers. We're starting to see that behavior take shape at the retail level. And we see layoffs announced at Walmart. We see layoffs announced at other companies like Gap and H&M. And that's a real warning sign. The consumer sector, the retail sector is about 2/3 of the economy. So when that starts to fall, that's when we get real nervous and we're starting to become very bearish on 2023.
And speaking about food, there's an article in the Wall Street Journal today talking about egg prices on the rise. They've risen already, but that they could surge to new records as a result of a new bird flu. It's decimating these poultry flocks that are out there. And this is just an illustration of when you're in such a vulnerable position already, how an outside event like this could exacerbate things. 536 a dozen in December. That was the record that we've seen so far.
Yeah, I mean, that's absolutely bonkers, to use an economics term there. The increase in egg prices, of course, doesn't just affect you when you pick up a carton of eggs at the grocery store. It has cascading effects because eggs are the ingredient in so many other products. So you see baked goods, for instance, are up about 16% on the year. That trend is going to continue in a negative direction. It's going to continue to rise in price. And that's a real gut punch to the American consumer right now when you can't afford a basic staple like eggs when you go to the grocery store. That's a huge disruption in our day-to-day lives.
Something I found really interesting, I think that impacted the market today, too, were Micron's earnings, right? Semiconductor company, sort of a bellwether for Wall Street. Report wasn't great. Outlook wasn't great. And they basically said that there's going to be a semiconductor glut, which is ironic to me because we had a semiconductor chip shortage, right? Now, we invested all this money to make semiconductors here. But having said that, demand is also coming down a little bit as a result of everything that we're seeing with the consumer. And at the same time, they're saying when there's too much of a product out there, it brings the price down. So they're laying off 10% of the workforce and they're suspending bonuses in 2023. It's just not a great picture. And you look at the administration and the policies and say, well, it was intended to do this, but now it's having the opposite effect. And companies are struggling in different ways.
Yeah, very well said, Jackie. And here's the moral of the story. The government shouldn't inject itself into the economy to the extent that it did in the CHIPS bill. That's tens of billions of dollars subsidizing private industry. When the industry recognizes that there's a shortage of a product, as it did in the case of chips, it should make its own investments. It should increase production here on American soil independently.
Right.
We need to pave a good path to make that happen in terms of our tax policy, in terms of our regulatory policy, but we shouldn't be shoveling money to private companies. It creates secondary problems. Not only does it exacerbate inflation because we're borrowing money, but it's created this huge chip glut that's going to cause people to lose their jobs. It's really, really sad.
Yeah, and that's a lot of what I've been talking about, Brandon, this job loss that is going to come in 2023. I don't think it's just going to be in tech. Real quick, your thoughts?
No, I totally agree. Like I said, it's already showed up in retail. Ford is laying off people. We're starting to see it seep into the manufacturing sector. Unfortunately, I think a lot of people are going to be losing their jobs over the next few months. I really hope I'm wrong. It's horrible news over the holiday season, but I do anticipate that this economy is heading into a rocky period here.
Yeah, it's unfortunate, especially ahead of the holidays here with Christmas around the corner. Brandon, Arnold, we wish you and your family a Merry Christmas, a Happy New Year as well. We're all going to have to get through 2023 together and figure it out. Thank you.
Thanks, Jackie.